This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/23/21, show number 301. Well, Nick, it looks like the Friday effect is back better than ever, huh?
It looks like it's back in business. This is where the market seemed to always rally on a Friday. That did not play out last week, but it seems that the Friday effect has not worked on the past two options expirations, and that's the June monthly expiration and the July monthly expiration. It looks like that Friday, the Friday effect has not worked. So going forward, we probably got to be a little bit careful during options expiration Friday next month. But overall, it looks like the Friday effect is in play today. Big gap higher open, and markets are holding up pretty well. With the exception of the Russell 2000, all the major indexes are in the green.
All right, and we're underway with earnings season, aren't we?
Yes, next week we are going to really get mega cap tech names reporting. It'll be the busiest week of the reporting season, but you're going to have these giant tech names report. Apple, Alphabet, Microsoft, Facebook, Amazon, they all report next week. Everybody is waiting to see what these companies have to say, what their numbers are. I don't think these numbers are going to be bad. I think they're going to be very good. It's just, is it already baked into the cake? That's the $1 million question. So like I always tell everybody, don't worry about the numbers. Just watch the reaction in the market, and that will tell you everything you need to know.
All right. Well, yeah, that's the way it usually works there. And, well, I think you're right. I think we're in that recovery mode right now, and earnings should be quite impressive, at least certainly among the FANGs, right?
I do think so. I think among this group of stocks, they're the mega cap names. They just have so many businesses. They have their fingers, their tentacles in everything, and they're getting paid on every side. So I have to think the numbers are going to be pretty impressive.
All right. And here's something that could be the sign of a market top ahead. Robinhood IPO, it's coming.
Yeah, the Robinhood IPO. It's probably the most highly anticipated IPO of the year, maybe several years. And everybody knows the company Robinhood. They've been in and out of the news earlier this year with GameStop and how they had to halt people's trades in GameStop, that limit the amount of shares they could trade there. It was a big debacle. They've had some fines that they've had to pay to the SEC before they could file for this IPO. But the company is expected to come public late next week. The ticker symbol for the stock will be HOOD, ticker symbol HOOD. And again, anytime you get to a major big IPO, you always got to be a little bit aware when markets are up at highs like this that it could mark a top. I don't think it marks a top that day, but very, very often it could mark some kind of a top shortly afterwards. So I'll be monitoring that very, very closely, looking for clues. As you know, the markets always give you a little bit of a tip off before they tumble, and we'll see how that plays out. But this is probably the most highly anticipated IPO in quite a while, and it will come public, I believe, next Friday.
And they're cashing out for billions, aren't they?
Oh, this is a massive IPO. I forget the exact number, but I believe it's $20 to $30 billion.
Yeah, for an app, basically, right?
Yeah, for a company that charges no commissions.
Yeah, and yeah, they just make it on the spread or the money that you have deposited there, right?
Well,
in your account.
You deposit the money in your account and you get to trade for free, but they sell your data and your information to some hedge funds like Citadel and market makers like that. So those guys get to see where the money flow is really going, and companies like Robinhood get to pass on the savings to their members.
Yeah, the savings. Yeah, right. Yeah, I believe that one. Well, interesting that they just totally shook up, disrupted the whole model of stockbrokers and trading. Really, they made it so easy and cost effective to go in and out that maybe it's been a detriment to traders who would otherwise hold with a trade, but now like they just throw in their chips way too fast and cut their losses?
Well, it makes you think, right? Who gives out, like if you're a brokerage firm, they've all had to move to this business model, by the way. So now you got Schwab, they're giving out free trades. E-Trade, which is owned by Morgan Stanley, they give out free trades now. And all the brokerage firms now give out free trades for your data and for your data flow, basically. So, I think it's a little bit critical. I just don't really like that whole operation. I don't like people seeing order flow before anybody else. I just think that's morally wrong. But this is the business we're in, I guess, and this is how it's going. And IPO and Robinhood actually started this. So they've grown to a very, very big size. They have a lot of members, and I guess they're continuing to grow. And again, I think you got to be real careful around this IPO. I've been waiting for it myself to come public for a while now, and I've told my members, I said, hey, when this comes public, we go into we're already in caution mode now. This is going to be one to watch very, very closely over the next couple of weeks.
Yeah, well, it's the changing face of technology. We see this all the time. Hey, what about Bitcoin? What's Bitcoin looking at now?
Well, Bitcoin right now today, the last I checked, let me just pull it up right here. Yeah, it's up a little bit. It's up $100, sitting at around 32,400. So Bitcoin's a little bit on the quieter side. If I may, Kerry, just to go back a little bit, when Bitcoin was roaring and soaring, a company called Coinbase, which is one of their biggest brokers or dealers to trade in Bitcoin or to allow people to trade in Bitcoin. So Coinbase Global came public, and that stock came public on the 14th of April. And we know that Bitcoin topped out right around the same time. So I would, tell everybody, be a little bit careful when this Robinhood comes out, because if Bitcoin is any omen to what those popular IPOs can do, everybody should be aware when the Robinhood IPO comes out.
Yeah, I think so. That could mark the peak very easily. But look, we've seen this kind of thing before, and it looks like the market will just digest it and move on.
Yeah, the market will always digest everything in time, and we'll see how it plays out. But in any case, this I always just like to warn everybody when these big IPOs come out like this, be a little bit careful. I think they're going to allow a lot of their members to actually buy into it as well, and that doesn't sit well with me either. When they allow the small investor to get a piece of their company, it usually doesn't fly that well. So we'll see how it goes.
Yeah, well, it's in keeping with their philosophy, I guess, for lack of a better term, right?
I guess so.
All right, so like getting back to Bitcoin, like we said, it popped up a little bit after the Elon Musk, Jack Dorsey confab, and but it's not really doing much, is it?
No, it's not really doing much. And if you just take a look at the chart pattern, it's really just putting in a lot of sideways consolidation down here between 30,000 and 32,000. So, again, it's living to fight another day. It still could have a little bit of upside here. I wouldn't rule anything out. You got a big resistance level after this around 36,000, more around 40 and 41,000. So there's always a chance they could pop it up there. But overall, pattern is just not a pattern of strength. So you got to be a little bit careful here, but it hasn't broken down yet, and it still has a fighter's chance to move higher. So we'll give it that benefit of the doubt. But overall, the longer it goes sideways, the weaker it becomes.
All right. So the good news on Bitcoin is that there's not a lot of bad news, right?
That's pretty much sums it up pretty well.
And gold and silver, lots of bad news there. Still getting slammed, huh?
Yeah, gold. I mean, gold is weaker today. Again, down on the futures by about 8 points right here, sitting at 1797. And, like yesterday, or even really the last several weeks since the June options expiration period where it got slammed down, I've been saying, that was not a good week. And the miners, we talked about this a little bit yesterday, and I'm going to reiterate it, is that they're acting really, really poor right now. And when the miners lag the metal, that's never a good sign. So today you have the GDX, which is the gold gold miners ETF down about 43 cents. So I'm a little bit cautious with gold at the moment. I think you have to be. But ultimately, that's fine. If they want to drop it, we'll get a buying opportunity lower. But right now, I would steer clear of it and remain in the cautious mode with gold and gold miners.
Yep, I think you're correct on that score, but you never know. It can go up at a moment's notice. You won't even know it. Hey, so we got some user comments here and questions. One of them has been asking, I think it was Jack, for quite a while about where you get your moving average for Bitcoin, because he's claiming that the moving average is actually a lot lower, that it was 32,000 and not 40 for Bitcoin.
Well, I'm not sure what moving average he's looking at, but what I use is the Bitcoin futures chart. And I know there was somebody that was putting up some kind of discrepancy about the 200-day moving average, but I posted the chart, showed everybody where that was back in May, where the 200-period moving average was sitting at around 31,100. Price on that day of May 19th when the market fell was basically as low as 30,200. So it pierced it a little bit, then bounced back above it. Right now, the 200-day moving average currently sits today as we speak around 36,485, as it is a rise, slowly rising. So that's where we are. But I used a Bitcoin futures chart, and the data that I got, Bitcoin goes back to January 2018. So I got a fair amount of data there to get a nice read on the daily chart, 200-period moving average, the 100-period, the 50-period, all of those moving averages are easily seen on the chart. So that's where I get it. And again, I would just tell everybody that's the chart that I use. So I don't know where somebody else is getting a discrepancy from. But I post up my charts right on my Twitter feed. I've given them charts to you, and everybody can see it. It's not like I'm making it up.
Yeah. So, Jeff has a question. Why are you so negative on Bitcoin? Don't you know that it's going to 100,000?
Well, anything can go anywhere. I'm not negative or positive. What I am is just interpreting what the chart is saying. And, when it was 65,000, I was saying that this is parabolic and it's going to come down pretty sudden. And when that happened, hopefully it helped a lot of people that were, able to take profits up there or protect their trade with a trailing stop of some sorts. But, I have no skin in the Bitcoin game because I don't believe in it. I think it's a scam. So I honestly don't trade it. And, I'm just interpreting a chart to help people.
All right. That's reasonable. And another one, actually, one of our female listeners out there, Jen says, don't you think the stock market is a bubble?
I do. I do think it's a bubble. I think it's a massive bubble. But bubbles can last a while. And this one has actually lasted longer than I would have ever thought. But that's why I use charts, because I could be wrong too. And again, I agree it is a bubble. I think the central bankers, not only here in the U.S., but around the world, whether it's the ECB, Bank of Japan, People's Bank of China, the European, the Australian central bank, all of these central banks, they're just printing unprecedented amounts of money. And it is a giant bubble. There's no question about it. But bubbles last a while. And if you traded in the 90s like I did, you'll know that they lasted all the way through the 90s into the 2000s. Lots of people thought they were going to blow up in 97 and 98 when we had the Russian ruble crisis or the long-term capital crisis. Either one, pick the name, but they're both the same. Or you had the Asian contagion crisis. So again, these things last a while. It's hard to kill a bull. I've been to a bull fight. I've watched it in Spain on a couple of occasions, and it's hard to kill a bull. And when you have this much money being printed, just understand the Federal Reserve is putting $120 billion a month out there to buy mortgage-backed securities and U.S. Treasuries. That money's got to go somewhere, and it goes into the markets. And that's honestly what's been happening.
Interesting. So Carl's got a question. You, Nick, as a trader, what is the biggest risk that you personally face in your business?
Well, the biggest risk is, waking up one day and, if you're trading long and obviously being wrong, the markets sell off against you. That's the biggest risk. But I always tell everybody and all my members, we're not going to win on every trade. You're going to have a stop loss. You have to have a stop loss in place. Know where you're wrong. I use a stop loss on either a daily or weekly close. I have that predetermined. So just know where you're wrong, and that will help you overall. There's nothing wrong with taking losses in this business. Any business, if you own a restaurant, you might buy too much chicken or poultry one day, and you might have to throw it away if you don't sell it all. So again, stocks are like employees. If they don't produce, you fire them, and that's really what it comes down to. So just make sure you protect against your losses. The biggest mistake I ever made when I was younger was holding on to a stock that wasn't performing and just watching it go lower and lower and lower, and my loss was just getting bigger and bigger and bigger. So if I could give advice to anybody, have it around a 10% stop loss. That's probably the best rule. Legendary trader Jesse Livermore used to use that rule, and when he did and he followed it, he was always very, very successful. Legendary trader W.D. Gann used to follow that rule, and I think all of the really good traders follow that rule. So if I could give one piece of advice out there, protect yourself against big losses.
Yeah, well, that's the first law of investing. Don't lose money, right?
Well, you're going to lose sometimes, and there's nothing. This is a tough trading year. I'm not going to sugarcoat it to anybody. 2021, I knew it. I called it the year of trading dangerously. This is going to be a tougher year than 2020 was. 2020, we had the panic, and probably one of the best buying opportunities since. This year it's much tougher because the indexes are making new highs or close to new highs, but you have bear markets in so many other areas and sectors, or you have big corrections in many, many industry groups, and that becomes very, very tough. Not everything is birds of a feather flocking together going in the same direction. So this is a much more challenging trading year.
All right. And finally, who is this? Gene says there's rumors that you're going to retire. Is that exaggerated?
No, that's not exaggerated. There will be a time in the near-term future where that will happen.
All right.
So that is not exaggerated. I've been in this business a long, long time, and sometimes you just want to call it quits. But I got a little bit left in the tank, so I'm sticking around for a little while longer. But yeah, at some point I'm gonna call it a day.
Isn't it like old soldiers never die; they just fade away?
That's right, and that's probably what I will do.
All right. Well, hey, that's it for this installment. Make sure you go over to inthemoneystocks.com, find out how Nick does it. Consistently beats the markets year in, year out for decades, and take a look at the Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz, and send your emails. Keep them coming to KL@kerrylutz.com. And Nick, have a great weekend. We'll talk to you on Monday.
Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.